Hi and Assalamualaikum. My name is Nurfatin Hassana binti Zuhairi and my matrix number is F1034. Today, our group will make a presentation about the journals of prime book and entry. Firstly, once the source documents are analyzed, the information is transferred first to the journal, which are also called book of first or prime entry, before posting to the ledgers are done. The journal is just like a diary, whereby information such as date, amount, other details regarding to the transaction is recorded. Also, a journal is an original notebook that records all transactions that occur in business according to chronological or date order. Journal consists of two types, which is namely as general journal and special journal.
Thanks to Fatih Hassana for introduction earlier. My name is Nurula binti Suhaimi, matrix number F1013. Now, I will explain about general journal first, and my friend will explain about special journal. General journal is a journal that records various business transactions which may not be recorded in another primary entry. Among the commercial affairs recorded in general journal include opening notes, purchase of non-current asset on credit, sale of non-current asset on credit, taking commercial goods, taking non-current asset, additional capital other than cash and bank, enlistment notes, error correction and realization. This is a general journal format. Firstly, in transaction details column have a 3 line. First line is detail recorded as debit written first. Second line is detail recorded credit as slightly from the edge. Third line is a brief description to explain the transaction that has been made or brief. In GL ref column is showing a cost reference to on the ledger. Does it mean you must to transfer at the ledger account? Next column is the debit amount is recorded in the debit column in line with the debit item. Next column is the credit amount is recorded in the credit column in line with the credit details. This is an example of a question related to the general journal, but I didn't take everything. I only took half of the things that need to be recorded in general journal. Purchase office furniture worth 6,000 from Alan. First thing first, you must know what is debit and what is credit. Debit is office furniture because office furniture is asset. Asset will increase at debit side. Credit is Alan because Alan is payable account. Why is Alan payable account? Because we buy from Alan on credit. So, Alan is liability. Liability will increase on credit side. And then you must write at details office furniture in debit side 6,000 and Alan in credit side 6,000. Okay, next. Encik Kamal wishes to begin a new set of accounting books. He has the following asset and liabilities. For this question, asset and liability has been given. You just have to write down in the table as usual. This question said Encik Kamal wishes to begin a new set of accounting books. This is mean asset and liabilities increase. Asset increase at debit side, liability increase at credit side. And you must total up the asset and minus all the liabilities, and you get capital 8,950.
Assalamualaikum and hi, my name is Musliha binti Nazmi, number matric 01 DIB 22F1025. Today I will explain about special journals. First of all, definition of special journal is in the field of accounting are specialist list of financial transaction record which accountants call journal entry. In contrast to a general journal, each special journal record transaction of a specific type, such as sale or purchase. This special journal is also used to record record certain transactions that occur frequently. Special journal have 6 transactions. First, sales journal, purchase journal, return outward journal, return inward journal, cash payment, and cash receipt journal. Okay, next I will explain about sales journals. Definition of sales journal is a specialist accounting journal, and it's also a prime entry book used in an accounting system to keep track of the sale of items that customers have purchased on account. Sales journals also is a list recording all credit sales for each period. Okay, next I will share to you guys the function of sales journals. The sales journals is used for posting credit sales to the sales ledger. Second, sales journals also to record sales of merchandise on credit to customer. And last one, sales journals function to summary. The purpose of the sales journals is to record credit sales. And the last one is feature of sales journals. Features of sales journals have 5. First, date. Second, number of customer or particulars. 3, invoice number. 4, folio, and the last one is final amount of invoice. Okay, now you guys can refer to the slide format of sales book. Now I will explain each column and the function. First column is date, which is records according to the chronology of transaction. The second column is name of customer or particulars, record the name of account payable or account receivable. The third column is invoice number, search document number. The first column is folio, page reference in special ledger and general ledger. And the last column is amount or final amount of invoice, which is net value after deducting trade discount. Okay, last I will tell some example in sales journals. You guys can refer to the slide. Example 7.7. First transaction, April 11. Sold goods worth 200 on credit to Lim, invoice number 123. Second transaction, April 21. Sold goods worth 300 on credit to Min, invoice number 124. And the third transaction, April 30. Sold goods worth 400 on credit to Man, invoice number 125. Okay, now you must have a paper and you write the title of journal or the type of journal, sales journals, and then you must have 5 columns. First column, date, and the second, particular. Third, invoice number, portfolio, and the last one is amount. First date, April 1, April 11. Particular is credit to Lim, so the particular is Lim. Invoice number 123. The folio, sales ledger 1. Amount is worth 200, so you need to write 200 at amount. Okay, we go to second transaction, 21 April. Particulars, credit to Min, so you need to write the name Min at particular. Invoice number 124, and the folio is sales ledger 2, and the amount is sold good worth 300, so you write 300 at amount. Okay, the last transaction is 30 April. particular is on credit to month, so you write month at particular. Invoice number 125, and then the folio is SL5R, sales ledger 5, sales ledger 3. Sorry. The amount is sold goods worth 400 at amount, so you need to write it there. Okay, the last one. After you done the transaction, at the last you must to write transferred to sales account, and you must to total up the amount at that transaction, which is 200 plus 300 plus 400 equals is 900. Okay, that's all from me. Thank you, and I will pass to the next presenter, Ayu.
Thank you to Musliha for the great explanation of sales journal. Hi and Assalamualaikum. My name is Nur Natasha Idayu binti Muhammad Sa. I go by Ayu. My metric number is F1003. And today I will explain to you guys about the purchase journal and return outward journal. So first, let's look at the purchase journal. So what is purchase journal? A purchase journal is a special journal used to record any merchandise purchased on account. The entries in this journal are made based on the invoice received from the supplier on the purchase date. Other names used for the purchase journal are the purchaser's book, the purchase day book, and the credit purchase journal. But the purchase journal, we just call it purchase journal. And next is the example of invoice. You can see at the top on the right side, we have the account receivable and account payable names, and at the top on the right side is the date and the invoice number. For the next slide is the example question. It's from the financial accounting for non-accounting students book. You guys can turn to the page 90, and the example is 7.6. Now let's look at the purchase journal. What we need to put in the purchase journal are the date, the particulars, invoice number, folio, and amount. So now let's solve the question for April 10, 20, and 30. For April 10, bought goods worth 100 ringgit on credit from Ali, invoice number 321. So for the date, we just put April 10th, and particulars is from Ali, and invoice number as stated on April 10, 321, and folio, which is, we would put it as PL1, which is meaning for purchase ledger 1, and the amount is 100. As for the April 20, bought goods worth 200 ringgit on credit from Rama, invoice number 890. So on date, we just put 20, and particulars is the name of the account receivable, which is Rama, and invoice number is 890. Folio, we will put it as PL2, which is purchase ledger number 2, because it's different from Ali. So we have two account receivable. So Ali will be the first one, and Rama will be the second one. As for amount, Rama is 200. And the last one is April 30. Bought goods worth 300 on credit from Chan, invoice number 007. On purchase journal, we just put the date, which is 30, and particulars is Chan, and invoice number 003, and folio PL3, amount 300. So as stated there, we have 3 different accounts receivables, so we have 3 different ledgers, but in one journal, which is the purchase journal. We just have to calculate and sum up all the amount. Here, we just have to sum up the Ali, Rama, and Chan amount, which is 100 plus 200 and plus 300 equal to 600. The folio would be GL5, which is General Ledger 5. We just have to transfer to the purchase account. So now we will moving on to the return outward journal. So what is return outward journal? Return outwards journal, sometimes called return outwards daybook or purchase returns. It is used to record transactions involving goods returned to suppliers. When goods are overcharged or returned to supplier, then a debit note may be sent to the suppliers giving details of the goods and the reason for their return. Here, for the next slide, are the example of debit note. As I said before, the debit note is sent by the customer to a supplier. So you guys can see at the top on the left side, the first name is the customer company's name, and at the bottom below it is the supplier's name, which is Mr. John. You can see the attention is to Mr. Johnson. Beside it, at the top on the right side is the date and the debit note number. Now we will be moving on to the example question for the next slide. We will look at the example 7.8 from the same book, which is Financial Accounting for Non-Accounting Students, 7th edition, page 91. So let's look at the written outwards journal. It's not too different from the purchase journal, but we just have to change from invoice number to credit note number. It's all the same. We just have to put the date, the particulars, change from invoice to credit note number, folio, and the amount. Okay, so for April 90, goods worth Rm 10 ringgit written to Ali, credit note number 001. So we just have to put the date, which is April 90, the particulars, which is Ali, the credit note number 001, folio, which is purchase ledger 1, amount 10 ringgit. The second one is April 25, goods worth 15 ringgit written to Rama, credit note number 321. So as the April 90, we just have to put 25 April, particulars Rama, credit note number 321, folio, purchase ledger 2, and amount 15. As we can see here, we have two account receivable, which is Ali and Rama. And for written outward journal, in the folio we still will put it in the purchase ledger, because Ali and Rama is our account receivable, so we just have to put in the same ledgers, but different in a different account, which is Ali will be purchase ledger number 1 and Rama is purchase ledger number 2. Then we have to just total it up. 10 plus 50 equal to 25, and we will transfer it to written outward account, which is in general ledger 7. So that's all from me. Thank you for listening.
Thank you, Ayu. My name is Irina. Metric number is 1023. Now I will explain a little bit about written inward and cash payment. Written inward meaning are items written to the seller by buyer, such as warranty claims, or in the case of a return of item for credit. Written inward happen when a customer return goods to us. Customer will return the good to us if there are damaged goods, wrong size, wrong item, and the like. So we need to record this transaction into written inward journal. The such document used is a credit note. We issue credit note to customer to inform that the balance owed has been reduced. Now, what account is written inward? A written inward book is an account that records all written goods and reduces the total account receivable of the business. Is written inward debit or credit? Debit for account payable and credit for purchase inventories for the written inwards.
For example question, April 60, goods worth Rm20 written by Lim, credit note no 111. April 22, goods worth Rm30 written by Min, credit note no 121. You need to write down below the written inward journal. The first column is date, which is April 60. Next column, particular links, credit note no 111, folio sale ledger 1, amount Rm20. Second, April 22, particular means, credit note no 121, folio sale ledger 2, and the amount Rm30. And you need to total out the amount. 20 plus 30 equals to 50. And at the end, you need to transfer to written inward account. Next, I will explain about cash payment journal definition. Cash payment journal has the same function as the credit section of the cash book, only the balance is not shown. The cash payment journal, also known as a cash disbursement journal, is a type of special journal used by companies to record all the transactions that lead to cash outflow from the business. Any transaction that reduces the cash balance of the company is recorded in the cash payment journal. Similarly, companies also create a cash receipt journal that records all the transactions that lead to an inflow of cash in the business. Some of the most common examples of the transactions that are included in the cash payment journal are, you guys can see in the slide. Firstly, purchase of goods for cash, cash paid to creditor, payment of any purchase like carriage, advertisement, rent, salary, wage.
cash paid for the purchase of asset, cash refund to customer for good return, and other cash payment. Format of cash payment journal. The cash payment are categorized in the cash payment journal as payment to account payable and payment to other account. The cash payment journal format is shown in the following image. As you guys can see in the slide, first column is date. Date is for chronological record for transaction. Detail is for page reference in sale ledger and general ledger. Cash and check acceptance. Purchase account payable. And lastly, other special column to record frequent payment. So for example question, this is a sample question on 7 June cash purchase of RM 1,500. We need to know if we get this from cash or check. If from cash, write in the cash column, while check, write in the bank column. This first question tells us that we get from cash, so we need to record cash 1,500 and purchase 1,500 because we get purchase. Second question is June 25, pay the syarikat D with a check worth RM 6,000. In detail is syarikat D, bank 6,000 because pay with check, payable account 6,000. Last question is June 28, pay employee wages in cash RM 800. Detail is salary, cash 800, other account 800. Lastly, we need to add up the result that have been recorded in each column. The first column is cash, we get 2,300, bank 6,000, purchase 1,500, payable account 6,000, and other account is 800. That's all from me. I will hand it over to my friend for next presentation for Fatin Hasana. Thank you.
Thank you to my friend. And hi again, my name is Fatin Hasana binti Zukairi, and my matrix number is F1034. So now I'm going to talk about what does cash receipt journal is. Cash receipt journal is a journal that used to record all cash received by the entity during the period. This could be an actual cash receipt, deposit into the entity's bank account, or electronic transfer. Like I said, it's all cash received by the entity. So whatever cash the entities receive, regardless of what the purpose it is for, then you will include it or you will record it in the cash receipt journal. Second, is source documents such as receipt and cash register summary is used to record transaction. The last one is cash paid out or owed to the entity is not recorded into the cash receipt journal. So this is the format for the cash receipt journal. So in the top of the column, there will be the name of the company and years of the business period is done. There will be 10 columns, which is 1 is date, that represent date of transaction. Second one is receipt number. Usually there will be receipt number that includes, but if you didn't have any, you may put it in the following number like 1, 2, 3 and so on. Third is going to be the detail. This column is going to be the column that we put the name of the person or the name of the entities that brought money to the entities. Fourth is folio. 5 is bank. 6 is cash. 7 is discount allowed. Next is account receivable, sales and other account. So this is an example for the question and the answer. So I'm going to go through only one question and the answer, which is going to be 2020 at May 7, which is receive a check from Aziz for 740, give a cash discount of 60 and receipt number is 1766. So at the date column, it's going to be May 7 because that represents the date of the transaction, which is May 7. Receipt number is going to be 1766 because in the question it's already be given, so all you need to do is just put it in the column of receipt number. So details is going to be Aziz because this detail column is going to be the name of the person or the name of the entity that brought money to the entity. And then at bank column, It's going to be 740 because remember, it's already said that we receive this money by check. Next is discount allowed, which is 60 because we receive a discount. And then account receivable, which is 800, which is the amount of combination of two numbers, which is 740 and 60. It's going to be 800. So at the end of the month, you will calculate all the amount that happened in that month, and then you're going to put it down below. So that's it. Thank you.